Standard & Poor's, they've affirmed now their BB long-term sovereign credit rating for the country. S&P saying that Portugal appears to be sticking to its bailout terms over the past year. The agency, though, gave a negative outlook for the country due to the downside risks stemming from the broader Eurozone crisis. For a technical look at Portugal's T-Bill in particular, Yannick Naud joins us, portfolio manager at Glendivan King Asset Management. Hi, Yannick.
Hi.
Do we look at Portugal all of a sudden now to find value in if you want to be in debt?
There is so much volatility within Spain and within Italy that I wanted to highlight a fact that is not very well known, is the fact that one Portuguese T-Bill, the October 2012 T-Bill, so maturing in a few months, is now trading at a negative yield. I mean, usually only the core European country like Finland or Germany can enjoy this kind of yield. But now, in this specific T-bill at least, Portugal is finding itself at negative yield. We think it's a consequence of few things. The very accommodative policy from the ECB. The ECB still accepts Portuguese T-bill as collateral in order to give some money, and the fact that probably a lot of money is moving away from Spain into Portugal in order to avoid either the country risk, which is more and more difficult to justify, or the volatility of the bond market in Spain.
We're talking about whether or not Spain can avoid a full bailout.
Okay, T-bills are passing interestingly. What about Portuguese 10-year bonds? I mean, I'm really interested. What's your view on that?
Yeah, the 10-year bond is a bit shy of 11% yield. Yeah. It's interesting to see that today Spain and Italy underperformed a lot after Draghi's intervention, and in fact Portuguese 10-year bond is stronger today, at the end of today, compared to before the press conference. So slowly the situation is getting better for Portugal, I think.
How about France? How about the OAT versus the Bund?
Okay, France has been overperforming Germany, in fact most of core European countries since the election of François Hollande back in May. The move has been quite significant. We think it's the market is giving too much credit to France, because if you look at all the recent data, all the economic data in France are not very good. The PMI was at 43.4, which is 38 months low. The unemployment is at 13 years high, and we think the market is giving too much credit to the new French government.
Okay, Yannick, thank you very much. Yannick Naud, portfolio manager from Glendivan King Asset Management.